Buying a home in 2025 is brutal. Prices are high, interest rates have skyrocketed, and honestly, most buyers are just struggling to get their offers accepted. But here's the thing, it's only brutal if you don't have the right guidance. Now, I've seen buyers lose out on home after home, overpay for their mortgage, or even get stuck with the wrong home loan simply because they didn't know how to navigate this market. Now, the housing market has changed drastically over just the last 12 months, and the strategies that worked even just a year ago don't necessarily work today. As somebody who's helped thousands of first-time homebuyers navigate this process, I've developed a brand new playbook specifically for today's brutal housing market. And so let me show you exactly what's working right now, starting with what's actually happening in the housing market today. Now, the 2025 housing market is completely different. There is a ton of confusion about today's housing market, and the numbers from 2025 might actually shock you, especially if you've been waiting for those pre-pandemic conditions to finally come back. Now, here's the brutal reality that most first-time homebuyers are facing right now. Mortgage rates are hovering right around 6.8% today, which is miles and miles away from the 2% interest rates that we were enjoying all the way back in 2021. And if you've been waiting for interest rates to drop back down to even 5% this year before you buy a home, I'd hate to break it to you, but you're probably going to be waiting a lot longer before that happens. The Mortgage Brokers Association, Fannie Mae, and even the National Association of Realtors all expect interest rates to be above 6% at the lowest by the end of this year. Unfortunately, this is our new normal when it comes to interest rates. So if you're waiting for interest rates like we saw back in COVID, you're probably going to be waiting forever. Let me show you what this means in real dollar amounts. Take a home purchased in 2021 for about $400,000. With a 3% interest rate, your monthly payment altogether would be $2,258. Now, that same home in 2025 obviously has gone up in value, so that same home is probably going to run you around $500,000. And with a 6.875% interest rate, your monthly payment is going to be $3,902. That's a whopping $1,600 difference in just the monthly payment alone. Not to mention the additional money that you would need for closing costs and a down payment at that higher purchase price. And so you can see this is why so many buyers feel priced out of the housing market right now. But interest rates are only part of the story. Let's talk about inventory, which continues to be a massive challenge. While we've seen a slight improvement, at least here in California, with the number of homes for sale on the market, it's still about half compared to the pre-pandemic levels of supply that we had all the way back in 2019. You see, the reality is majority of homeowners are locked into those sweet 2 or 3% interest rates that they got during 2021, 2022. And so as a result, they simply aren't listing their homes, and many of them may never sell at all. I mean, think about it. Why would they give up a 2% mortgage to buy another home at nearly 7%? Now, what's really concerning is despite these higher interest rates, home prices haven't crashed like a lot of people had expected. In fact, nationally, home prices are up by almost 4% year over year. The median price of a home in the United States is right around $425,000, compared to around $329,000 all the way back in 2019. That's nearly a 30% increase in just the last 5 years. And so you might be asking at this point, well, it sounds like this market's terrible. Why would anyone buy a home right now? Well, the reality is, for a lot of people, home buying isn't just a simple investment. Home buying is a goal and a dream that a lot of people have, and their life circumstances might mean that they need to buy a home regardless of the fact that it might not necessarily make a ton of sense right now. And despite how bad everything seems in the housing market compared to just a few years ago, I actually weirdly believe that there might be some of the most amazing opportunities for homebuyers in this market that not a lot of people are seeing. You see, here's what people miss when they're looking at these big national statistics. When you're looking at it at that level, it only tells part of the story. The housing market isn't just one big market. It's made up of hundreds of smaller local markets, each with their own dynamics. For example, while some cities in the Midwest might be experiencing pretty moderate gains of about 2 to 3%, right here in California, depending on the city that you're buying in, home prices are going up about 6 to 8% year over year, and that's a huge difference. You see, ultimately, the media and forecasters don't have the best track record of predictions. And honestly, most of these headlines are made to strike fear in most home buyers because that's what gets clicks. And so if you are thinking about buying a home right now, it's more important than ever to be working with a local professional who can actually guide you through the process and let you know what opportunities exist in your specific housing market. And that being said, if you want to be connected with a local professional in your market to help you find, negotiate, and close on your first home, click the link below to schedule a one-on-one call with me and my team. Now, that being said, even with expert local guidance, I'm still seeing so many homebuyers sabotage their home buying journey, making mistakes that cost them up to $10,000, even $50,000 simply because they didn't know some of these strategies. Now, what's truly shocking is over 70% of homebuyers are leaving money on the table simply because of this one thing that honestly can be fixed in less than a couple of hours. Now, why is it that seemingly smart and very well educated people continue to make these very expensive mistakes when they're buying a home? Now, the reality is for most first time homebuyers, when we're faced with difficult financial situations, we end up getting caught in analysis paralysis, meaning that we ultimately end up convincing ourselves that the most perfect moment is the safest choice. But when it comes to buying real estate, especially, or any investment for that matter, that kind of analysis paralysis can be incredibly expensive. The first major mistake I see first time homebuyers make is waiting for the perfect market or trying to time the market entirely. For example, I had a client, let's call him Michael. He was ready to buy his first home and he was already pre approved all the way back in 2022. As most first time homebuyers do, he went and saw a bunch of houses, found one that he loved for $475,000. But at that time, interest rates were starting to rise. And because of that, he was convinced that rates were going to drop again and he was going to wait it out. Now, at the time, interest rates were starting to creep up a little bit. And he was convinced that rates were definitely going to fall back into the twos or threes. And he was going to wait to make sure that he got a really good deal on that house. Well, fast forward a couple years to 2024, and Michael did end up buying a very similar property, just for $520,000 instead. Not only did interest rates not fall, but that decision to wait cost him an extra $45,000 for pretty much the exact same property. But the financial impact of waiting goes beyond just the purchase price. While waiting to buy a home, you're also missing out on the equity that you could be building if you just bought sooner. Not only that, instead of paying for your own mortgage and getting all the different tax benefits from it, if you're renting, that's even more money that you're throwing away. It's estimated that the average homeowner who waits even just 1 year before buying their home is leaving up to $10,000 to $20,000 of equity on the table simply just by waiting. But here's the good news. Those wasted dollars don't have to be your reality. What many buyers in this market right now don't realize is there's a ton of opportunity for you to save money, even get basically free money to help you buy a home right now. Now, what most buyers don't even realize is that there are several different programs and strategies available to them right now that weren't available in the past that could help them save tens of thousands of dollars when buying a home, specifically in this market. Programs that 90% of buyers don't even realize existed because, frankly, no one ever told them to look. So let me show you exactly how some of my buyers are saving tens of thousands of dollars, cutting off a ton of money off their monthly payments or their closing costs, or even both in today's market. Now, by and far, probably the most popular option for home buyers right now to help them save a ton of money is something called the 2-1 buy down, or a temporary buy down. This strategy allows you to use a seller credit in order to get a way lower mortgage payment for your first couple of years of homeownership. Now, as somebody who bought their first home in the last few years, I can tell you with confidence that any kind of strategy that can help you save money on your monthly payment is definitely going to be appreciated. So here's how it works. Instead of starting with a 6.875% interest rate like you would today, you would get a seller credit of about $11,000 in this scenario, basically the total amount of savings in your first few years, to start you at a 4.875 interest rate. In year two, go to a 5.875 interest rate, and then end up at a 6.875 interest rate later on. The way I like to explain it is you're essentially deferring your savings and spreading it out over your first couple of years. Now, the reason you're able to use this strategy at all is the fact is sellers are still desperate to sell their homes despite the fact that there are not a lot of buyers out there. And so if you are buying a home right now, you can use this information to your advantage and find a property that's been sitting on the market for a little while. And instead of having them take that money off the price of the home, which in this case might only save you about $60 a month, you can save as much as $600 in your first year using this strategy. And so if you're somebody who's more motivated by your monthly payment versus your total cash out of pocket, this is a great strategy to make home buying a lot more affordable. And so in this example, if your biggest concern is having the lowest monthly payment possible, but you don't want to spend a ton of money buying points, discount points to get a way lower interest rate, using a seller credit to use something like a 2-1 buy down could be a great strategy for you to save a lot more money in your first couple of years of home ownership. Now, the alternative is fine as well. Let's say you're totally fine with the payment at 6.875. Well, you could just ask the seller for an $11,000 credit for your closing costs and take that $39,000 in this example all the way down to about $28,000 instead. I really don't think there's a right answer. It just comes down to what's more important for you. Now, another strategy that I'm really surprised most buyers aren't even using, and even real estate agents or lenders aren't even talking about, is using some sort of down payment assistance program, either at the state or local level. You'd honestly be amazed at the amount of basically free money that's out there for home buyers right now because the government ultimately really wants you to buy a home. In fact, I'd probably say that more than half of the home buyers that I'm talking to right now don't realize that there are a ton of programs out there that they're qualified for that that can give them 10, 20, even $50,000 towards buying their first home. Now, for the most part, most of these programs just require you to be a first-time home buyer, have a credit score of at least 640, and to fall below a certain income level depending on your area. Now, the biggest mistake I see a lot of people make is most people don't think that they can qualify for these because they think they make too much money. But you'd actually be surprised, especially in places like San Diego or Los Angeles, where it's considered a high cost of living area. Those income limits can be pretty flexible, and some places might not even have them at all. Let's take a look at this example together. Now, this example compares a traditional 3% down conventional loan with a down payment assistance program that we offer here in California called the CalHFA loan. Now, what surprises a lot of people is most people think that down payment assistance programs have really high fees and have really high interest rates. But in this example with the CalHFA loan, the interest rate is basically identical to what you would get with your own money out of pocket. And so as a result, you end up with the exact same monthly payment that you would have. Now, the biggest difference with this program is it covers your down payment of 3%. So that's $15,000 in this example. Now, the loan fees for this program are a little bit higher than if you were bringing your own money out of pocket. But because the interest rate is the same and you're getting down payment assistance, if you can also get a seller credit on top of that, you can end up with the exact same monthly payment that you would have coming out of pocket with your own money, but end up coming up out of pocket even less because of the seller credit and the down payment assistance combined. And so where the 2-1 buy down is a great option if you're really motivated by your monthly payment, if the cash out of pocket is the biggest barrier for you to buy a home this year, using a down payment assistance program and combining that with the opportunity to get seller credits to cover some, if not all of your closing costs, can mean that you buy a home with little to nothing out of pocket at all, with the same exact interest rate that you would get with your own money. Now, by far, the single most powerful, but honestly the simplest strategy that my clients have used to save a ton of money when buying a home is doing one thing, and that's simply taking the time to shop around and compare multiple lender quotes. Now, as a mortgage lender, I'll admit it, the last thing I want to do is get shopped around by my clients for a mortgage. But at the same time, clients who've come to me shopping, I've been able to save them tens of thousands of dollars in interest by finding them a much lower interest rate for the exact same loan. Now, while a quarter to 0.5% interest might not seem like a lot, on a $400,000 loan, that can mean as much as $20,000 to $40,000 in the next 10 years. Not only that, by getting a lower interest rate, you can do a couple of things. You could either A, just get the same home with a lower monthly payment, or that difference in the monthly payment could be the difference between you getting a much bigger home. But to this day, it still blows my mind how many people just go about the home buying process, never second guessing the kind of financing they're getting, and ultimately end up with a significantly worse loan if they just spent a little bit of time shopping for the right mortgage. And so that being said, if you've gotten a pre-approval and you just want to make sure that you're getting a second opinion on it to make sure you're getting the best deal, click the link below and schedule a one-on-one with my team. We'd be happy to look it over for you. Look, I'm not going to sugarcoat it. The 2025 housing market is definitely tough, but it's absolutely one where you can find a great win as long as you're using the right approach. And I know this because the clients that I'm working with right now are using the strategies that we've talked about in this video to buy their first homes, and they're saving tens of thousands of dollars doing so. And so yeah, although the housing market seems unaffordable right now, if you're using one or all of the strategies that we've talked about in this video, I can pretty much guarantee that you're going to save more time and money than majority of the home buyers out there. But the big mistake that 99% of home buyers make is jumping into a housing market without some sort of roadmap of what to do or what to expect and what strategies to use to save money. Watch this video next where I'll break down the entire home buying process from start to finish so that you know exactly what to expect and what you need to be doing so you can buy a home in the next 12 months.